Welcome to Sathish Speaks channel. What is the one thing which is common among everyone in this society? Which is everyone has a financial dream goal for ourselves, isn't it? There are certain people, few peoples, they create effortless wealth. Their wealth creation journey is actually very effortless, and they create wealth not only for themselves, they create a sustainable wealth even for the next generation. But majority of the people, they actually struggle to create wealth for themselves. Why this is happening? In this video, I'm going to explain to you 5 biggest mistake when you actually do your wealth creation process. If you avoid these 5 mistakes, I am sure that you can create sustainable wealth not for yourself but for your future generation also. I am Satish, financial consultant and author of this book called Untold Wealth Secrets, and also the author of a series, which is financial series, which is called Middle Class to Millionaire, which is featuring in non-AM beginner. 10 episodes has been completed and many more to come. If you need any mutual fund equity advisory, my WhatsApp number there in the description, connect with me. And if you are watching this video, please click the like button. Please be generous, because the chances of this video reaching multiple people very high when you click the like button. Okay, let's get into the 5 biggest mistake. The number one mistake, which is people believe that high performing funds are the best fund. Today I have received a call from a retired investor. So he wanted to invest a lump sum for his own retirements. So he received a corpus after his retirement, and he wants to invest in mutual fund and take interest from that. So I have given him an asset allocation. I have given him the recommendation. When I given that recommendation, he comes back with me asking about a clarification. He was asking me that, Satish, why you have not recommended quant infrastructure fund in this recommendation list? I explained him that quant infrastructure is a very high aggressive thematic fund. You are already retired and you have a very less risk appetite. This may not be a suitable fund for you, because number one, you are a beginner, you are just starting your mutual fund investment experience, and number two, you have to complete investing in all the existing categories before you invest your money into high aggressive. Investing is like a pyramid. First, you have to invest in a fund or a scheme which is having a very less risk, and then moderate risk, and then high risk, and then a high aggressive risk, like this. So, first complete all the categories which is non-risky, risky, moderate risk, high risk, and then you can invest in quant fund. That is what I have explained to that gentleman. Many direct investors choose their fund schemes based only on the past performance, only on the return basis, which is biggest mistake. Because when the market falls, this is the first fund to fall more than the market. From January 1st, 2021 to 2021, one calendar year, infrastructure has given in excess of 60 to 65% of returns. Will it continue to give same kind of return for future? Definitely no, it is not possible. So when you invest with the past performance as a guidance alone, it may not be the suitable fund for your portfolio. So never go by returns, go by asset allocation. High performing fund may not be the best performing. So that is the first biggest mistake people do commonly when they invest on their own. The second biggest mistake is they feel that I can time the market. Even today, I have received a query from my investor from Dubai, and his query was a little surprising and shocking to me, because he asked me that, Satish, can I buy mutual fund and sell mutual fund when it is high, and again when the mutual fund market goes low, and I will buy it again back. So he is saying that I will time the market, I will sell mutual funds when the mutual funds are peak performance, and then whenever the market goes down, I will buy it again. No, this process might be practically possible, but look at the consequences. Number one is that when you actually sell, you got to pay the exit load, number one, and the short term gains, which is also high, the taxation point, and timing the market is next to impossible. Nobody in this world, nobody will know that which is the highest level in the market, the 52-week high the market can go, and which is the 52-week level, the lowest point that market can touch. It is next to impossible. There are two kinds of investment option. The one investment option is strategic investment option. The second is tactical. Strategic is when the market actually goes down, falls, every fall you actually buy regularly. So because you don't know which fall will be the lowest level. That is called strategic. You are wisely investing in each level. So you are actually doing the rupee cost averaging whenever the market is going down. That is the best way. But tactic is identify the lowest point, invest, and get out, identify the highest point, which is next to impossible. Never try to time the market. I have seen investor, they have cash in their hand, they always wait for perfect timing, and the perfect time will never happens. Never time the market, rather spend time in the market. Invest for a longer horizon, you will be the rich and successful investor. That is the second biggest mistake. Third biggest mistake which every investor thinks that I can create wealth overnight. We are living in a fast forward world. We need everything very quick or very fast to happen. For example, when we see movie in Netflix, we actually fast forward the songs, we actually fast forward the fights. My father retired in 58 year of old, and I am planning to retire at a much earlier stage, let's say 45 or 50 by active retirement. And the peers in my age, they wanted to retire by 45 to 50. And you know, the new millennials, they are just starting their work when they want to retire at the age of 35. At the age of 35, they wanted to retire and they wanted to pursue their personal interest as a hobby or as a side hustle. So we are living in a very hustle or fast forward world, and everyone wants their wealth also to be created in a very short span of time. Nobody has the patience, the temperament to hold on their investment and to create a sustainable wealth for themselves. But I am telling you that it is not possible to create wealth overnight. You can see all the millionaires and billionaires who created wealth for themselves. Let it be in business or let it be investments. They spent a good enough time, a good horizon in building business or in building their wealth through investment. They would have spent at least 10 years before they have created a sustainable wealth. At least spend the time of 10 years in investment and then decide. They, the most of the investors, they don't even have that kind of a time frame. They want wealth in 1.5 years, 2 years. That is no magic. It is like seeding a seed, and then you are actually wait for that to sprout and then to become a sapple, and then you will bear the fruit of the seed. So you got to allow the time for the investment to grow. So the third biggest mistake, which is I can create wealth overnight. No, it is actually a temperament patience process. Number fourth biggest mistake, which is invest and forget. I have many investors, when they actually show their portfolio, they have many life insurance policies. If I ask them how many life insurance policies you have, they have no clue. If I ask them how much gold you have in your household, they don't know how many grams of gold they have, how many kilograms of silver they have in their household. Simply, they don't have a count of their wealth net worth. So, have you done an audit for 2021? How much money you have invested in 2021 in mutual fund, and how much return you have got from that? How much return you have got from your stock? How much return your gold has delivered? How much return your real estate assets have delivered to you? Have you done an audit? It is extremely important to do a portfolio review on a regular basis. If you are not actually doing a review, you will never know which asset is a high performing asset for you. This is the fourth biggest mistake every investor does. Don't do this mistake. Review your assets periodically, at least once in 3 months. That is the best timing. Number fifth biggest mistake, which is I don't need an advisor. I am an expert by myself, and I do investments by my own. This is the fifth biggest mistake. Let me tell you, Sachin Tendulkar, who is a god of cricket, when he was actually playing his international career, he still had a coach. God of cricket still had a coach when he was actually playing cricket. See, Sachin Tendulkar had the highest level of expertise, skills. He knows what is cricket, how to play, everything, but still he need a coach in order to improve his performance. Not only Sachin Tendulkar, you take every profession, the successful business people, they have business mentors. Mr. Rajiv Bajaj, he have a business mentor. The successful Bollywood actor Amir Khan, whenever he signs up for a new project, he actually hires a personal coach, personal trainer. He is actually a very trending actor because every project he actually gives some kind of a trend by making flamboyant effort, or he is lean down his body, he is actually grow his body, he do so much of transformation, but he has all the expertise, all the knowledge of actually shrinking and doing over it, but he signs up for a personal coach when he signs up for a movie. So you need someone to guide you when it comes to wealth matters also. Some people feel that okay, what the experts will do, they actually choose a high performing fund and it is already available in economic times, value research, money control. But the fact is, investing is not only about choosing the best high performing product, it is all about handling your own emotions. Suppose, let's say that your portfolio have delivered 100% of returns. So what will do sometimes, you feel that okay, it has grown to 100%, let me take some money back from my portfolio. But that could be the right time for you to allow the money portfolio to accelerate it. Or when the market goes down, you might fear out that you will be losing more and you might withdraw. But when you have an advisor next to you, investing is always a complex matter. Leave the complex matter to an expert. He will advise you how actually your emotions, the temperament to be controlled. He will advise you the market will bounce back. Please don't worry about it. Trust me, I have seen this kinds of downturn. So you will have an assurance and you will keep continue your investing. So this is the fifth biggest mistake. So when you avoid all these five mistakes in your investment journey, I am sure that your investment journey will be faster and smoother. Smoother is what everyone looking forward to. So if you need any advisory on equity, mutual funds or PMS, my WhatsApp number there in the description, connect with me. And if you like this content, please do click the like button, because the chances of this video reaching multiple people very high when you click the like button. And importantly, stay tuned to this channel because I will be bringing much more interesting video on personal finance and investments in equity as well as in mutual fund. Stay tuned to this channel. I'll see you with another interesting video.